5 ways to avoid paying more taxes as somebody who's employed here in Kenya. The first one is pension. If you contribute money to a private pension scheme that is registered, you are going to benefit. Let me show you. Let's assume that your salary before taxes, gross salary, is 100,000. In Kenya, a maximum of 30,000 that is contributed to a registered pension scheme is allowable, is used to reduce the taxable amount. So let's assume that assuming that you contribute 25,000 shillings every single month for your pension scheme, rather to your pension scheme. So you contribute 25,000 shillings every single month to a registered pension scheme. Since the 25,000 shillings is below the threshold, which is 30,000, 25,000 of the amount of money that you contribute to a pension private scheme is going to reduce the amount of money that you're going to be taxed. So it's going to be minus 25,000 shillings because it has not met the threshold. And then NSSF, contribution to NSSF, which is 2160, has to be deducted. So the remaining amount of money that in this case 100,000 minus 25,000 minus 2160 is going to, now the remaining portion of the money here is the one that is going to be used to calculate your tax. Let me show you something else. Let's just say like you decided to go for the maximum 30,000, right? You contribute 30,000 shillings every single month to a registered pension scheme. In this case, the amount of income that you're going to be taxed, the taxable income, is going to be minus 30,000 shillings. So your taxable income is going to be 70,000, and then out of the 70,000 there's going to be deductions from there. So you can see that if you decide to contribute the maximum 30k, you're going to benefit from tax, such that instead of this 100,000 shillings which is going to be taxed, it's going to be less than that, less the amount of money that you're going to contribute, with a maximum of 30,000 Kenyan shillings. Let's take, for example, a scenario like this. Let's assume that you don't have any pension scheme in place. You don't contribute any money for your retirement. With 100,000 shillings, when you punch in to the pay calculator, pay as you earn tax calculator, it's going to show you that you're going to be paying tax. Your tax is going to be 20,000. 20k, around 20k there. So you have 100,000 shillings, but then you don't have any private pension scheme where you're contributing money towards to. So the tax that you're going to be paying on this 100,000 is going to be 20,000 Kenyan shillings. Okay, there's a range there, but I just rounded it off. But now imagine if you had a private pension scheme where you're contributing 30,000 shillings, you're going to be paying tax, a tax amount of around 12k there. You see, so you are basically paying tax as somebody who earns around 72,000 gross. 72,000, 70,000 there. This is what I'm talking about. Instead of you paying 20k, around 20k as taxes, you're going to pay 12k as taxes. How awesome is that? The second way to reduce the amount of tax that you pay on your paycheck is through insurance relief. So here we're talking about you having an insurance policy, a life insurance policy. So let's assume that you bought a life insurance policy with a certain XYZ insurance company in Kenya. So the regulation is that you can claim a relief of up to 60,000 shillings per annum. So per month is going to be around 5k. So 5k every single month is the maximum that you can get as a relief. So let me explain this. You see, when you, okay, let me just take this scenario. You earn 100,000 Kenyan shillings, and then this one is taken out, and then now the taxable income is 70,000. There are other deductions that usually take place within this taxation, which I don't think you need to know about. But then at the end of this calculation, there's usually a relief, a tax relief on NHIF. Now we're not using NHIF. So a relief is something that is reducing your taxes. Let's assume in this case your tax was supposed to be hits 12k. So let me assume like the tax that you're supposed to pay is 14k. That is before the relief. So we take away the insurance relief. So in this case, let's assume that you have a life insurance policy and the maximum is a life insurance policy. I can't do the math because it's so long, but then let's assume that in this case you qualify for this 5k. This 5k, like you are actually contributing the highest amount, the highest premium amount that you pay on a monthly basis. So assuming that it amounts to 5k, I have to work backwards, which I can't do right now. So instead of you paying this 14k as tax, your insurance relief is going to be 5k. So you can imagine, instead of you paying 14k as tax, when that column for removing the relief, 5k is taken away. You can see that you're going to pay a tax of 14 minus 5, that's 9k. Yeah, okay. This one is a little bit more technical because I had to work backwards, but I can't do it right now. But at least you understand that assuming that you didn't have a life insurance policy, it also applies to an education policy. So if you have one for your kid, if you're a parent, you can also take advantage of this. It means with the premium that you pay every single month, it's going to make a difference in terms of the tax that you're going to pay from your paycheck. Then the third way to reduce your tax or to avoid paying tax is through mortgage relief. Again, this is a relief. A relief is something that is taken away from the tax that you're actually supposed to pay so as to reduce the amount of tax that you're paying. So it's a relief. It's like instead of you paying 14k, we will relieve you of 5k. The way I showed you here. So it's the same thing. Now for a mortgage relief, imagine that you've taken a loan for the sake of building a house, buying a house. You can benefit from that tax-wise. Why? Because a maximum of 300,000 shillings per month, 300,000 shillings per year. This is per annum. So this is around 12k per month. 25k rather, 25k per month. Imagine if you're supposed to pay a tax of 70,000 shillings and you qualify for this 25k, then you get to pay less the tax amount, 25k, if you reach the threshold. So again, for this I have to work backwards. There's usually like a mathematical formula that is used to calculate this. It's usually within a document called a P10, but don't worry about it, where you have to key in the value of, where you have to key in the mortgage value and all that, and then it automatically calculates that. So if you are employed and you have mortgage already, when you look at your paycheck, you're going to notice that there's this column for mortgage relief that you get to benefit from, unlike for somebody who doesn't have any mortgage. So that's something that you might want to consider, taking a loan for a housing project. And then again, it's all about the government making it easier for you to own a home. So it's an incentive for you to be able to own a home. So this is in terms of you taking a loan. Now, there's also another benefit that you can take advantage of. It's under home ownership savings plan. So here you are saving money, but it has to be a regulated, registered savings plan. So you can decide every single month, I want to set aside this amount of money towards having my own home. So this one is for debt. You're taking a loan. This one is for savings. But for this one, it's 8,000 shillings per month. That is the maximum that you can enjoy. Again, 8,000 shillings times the 12 months. In a year, you get to enjoy 96. There's one thing to note here. This one is only going to be allowable for 10 years. So if you save for more than 10 years, the extra years are not going to apply for this. Now, the final one is if you have a disability, you can take advantage of the tax exemption on people with disability. So for this, it only applies to the first 150,000 shillings of the income salary that you earn. So let's assume that you have a disability and you make around 300,000 every single month as your gross salary, 300,000. The first 150 is not going to be taxed at all. So in this case, you're only going to pay tax for the remaining amount after 150,000. In this case, it's 150,000. Or let's assume that you make 200,000 shillings as your gross salary. So the first 150,000 won't be taxed. The extra 50,000 is the one that is going to be taxed. Let's assume that you make 100K. You're not going to be taxed at all because it's below the 150,000. Which one have I left out? Which one have I left out? By the way, for pension, it used to be 20,000 shillings, but thankfully last year, like in December 2024, it was increased to 30,000 shillings. So this is something that you can take advantage of, especially if you already have, if you are already registered in a pension plan. Because if previously you were able to take advantage of the 20K, now you can actually increase your contribution to 30K to your pension plan. Now imagine this. Let's assume that you make 100K as your gross income. Then you have 30K that is contributed to a registered pension plan. So you benefit from this. Then out of this 100K, you probably have a life insurance policy. You're contributing money towards your kids' education or just a life insurance policy. Then you also get to take advantage of this. What if you also have mortgage? You've taken mortgage, so you can take advantage of that as well. Or you have a home ownership savings plan. You get to benefit from this. What do you think? Would you now reconsider contributing money to your pension scheme? Or rather, would you consider registering yourself to a pension scheme now that you've seen you can take advantage of 30K and also have a life insurance policy? What do you think? Thank you for watching this video. Like it and see you in the next one.